going to close out this plenary session talking about green bonds, what they are, what drives a company to issue one, and what can we learn from the pioneers. The pioneer in this case is Johnson Controls, which last fall issued one of the largest bonds from an industrial company, green bonds, at $625 million. It was enormously successful. It was oversubscribed by about 9 times. That's the what. We're going to get into the how and the why. Joining me are Katie McGinty, the Chief Sustainability Officer at Johnson Controls, and Olivier Leonetti, the Chief Financial Officer at Johnson Controls. Welcome to you both.
Thanks for having us, Joel.
Thank you for having us, Joel.
Olivier, let me start with you. What prompted Johnson Controls to want to issue a green bond in the first place?
So two reasons for that, Joel. First of all, this is the right thing to do. If we can contribute to make the planet for our grandchildren and children better, we should do that. That was one reason. The other reason is we are in an industry today where decarbonization is a big deal. And the bond allowed us, I would see the bond not only as a cheaper financing instrument, but also as a seed R&D investment. It's pushing us to decarbonize. It's pushing us also to propose decarbonized solutions to our customers. And we think that this trend is going to keep going and transform the industry. So 2 reasons, Joel.
So how did you know there'd be a market for this?
This is the insight we had. We talked with our partners. We had one key partner on this bond, which was ING. We talked to them. We thought we could find a market for this. Again, our vision, doing something right, was important, and we kept pushing. And ING gave us strong signals that we could do this, and we did. And we have learned along the way, actually. I'm sure some details we'll discuss with you today.
So talk a little bit about, this is tied to some ESG metrics. How does the bond work? What's the green part in terms of the cost of capital to Johnson Controls?
So first of all, we did a fair amount of work before to go into this, to understand really what would qualify as a green bond. And I know, Joel, you talked about that during your conference. What qualifies is still undefined, right? So we worked with ING, we worked also with Sustainalytics to define the framework. And we are actually following as a framework the ICMA framework, as well as the EU taxonomy framework. And what we're doing is basically reducing the carbon emission for us and our customers through our equipments. That's what we are doing. And our commitment when we issued a bond, which was, as you said, 9 times oversubscribed. Usually you are 3 times oversubscribed. So 9 times was a big difference, was based upon the quality of the commitment we had, and also our commitment, Joel, to have our KPIs audited by third parties. So PwC is auditing to make sure that we are fulfilling our promise. In terms of benefit, the benefit is around 10 basis points. So you can do the math. So that's about $500,000 over 10 years. So that's about $5 million would be the benefit. But the main one is the impact in terms of transforming the industry, us learning about transforming the industry as well, because it's forcing a transformation. It's us appealing to a new audience of investors, which are more long-term orientated, and also us appealing to our employees. New generation today put a big deal behind sustainability. So that's also the factor. So better cost, better investors, and a better way to attract and motivate our talent.
So Katie, let's bring you into the story. Talk a little bit about how this worked from the perspective of your office. At what point were you brought in, or did you drive this? And what was the role that the sustainability office played at Johnson Controls in, I guess, partnering with finance to make this happen?
Yeah, well, thanks. So it's been a seamless partnership between the finance team and sustainability. And I think, as Olivier was saying, that's one of the great upsides of these kinds of initiatives in terms of corporate culture, cohesion, and shared drive. But to get very specific about this, so as it relates to the specific financial structuring, of course, our finance team drives that. As it relates to what really constitutes green, number one. Number two, having a very precise yardstick as to how we're going to measure the emission reductions that come from the projects that benefit from the proceeds of the bond. That's where the sustainability team helps to lead the way. And in terms of how important that is, it's really critical that this, what constitutes green, that we have a high bar in terms of what constitutes green, but that we have comparable, reliable metrics. So the same yardstick that will define the success of our green bond investments is the same yardstick that defines our scope 1 and scope 2 and scope 3 emission reductions, all of which then we put out there for third-party scrutiny.
So talk a little bit about those metrics. What did you commit to, and how are you being held accountable?
Sure. So again, as Olivier laid out from the start, we brought in key partners like ING and Sustainalytics and adhered to those definitions of green projects as have been adopted and recognized. Within that, we want to drive hard against sectors that, frankly, policy sometimes leaves behind. So in climate policy, it's often solar and wind and electric vehicles. And we're going to do some of that too. But buildings is where we have 40% of global greenhouse gas emissions. And so a big priority for us is around making those buildings as efficient and driving them to net zero as we possibly can. And the green bond tool is essential in that. One of the things that is of interest to us is statistically, the green bonds that have been out there, about 30% of them have gone to help decarbonize that building sector, which I think is a big upside of greening the capital markets.
And so what happens if you don't fulfill the commitments? Is there a penalty, or what happens?
Olivier, you want to kick that off?
Yeah, so we are auditing what we do, and we publish the audit report as part of our green ESG reporting. We will have an impact on our reputation and potential legal damages, but no, in contractual terms, no clear penalties. But just to be clear, Joel, we are meeting our commitments, and we are well on track to do what we said to our partners.
And if you didn't, is there any penalty for not meeting them?
We will have reputation damages, and potential will be exposed to legal claims. And next time we're going to be in the market, obviously nobody will trust our voice, and the reputation of the company is paramount. So that reputation is a big deal to us, John.
Yeah. So would you have done this, Olivier, if this was cost neutral and not you said 10 basis point discount? Would this have been, and would you have done this if it was a 10 basis point premium?
It's interesting you asked. The answer is yes, with big capital letters. And the reason is we believe that decarbonization is a business trend which is accelerating. It has been accelerating in Europe for the last 5 years. It has been accelerating now in the US steadily for the last year. And this trend is not going to stop and will be amplified. And we think that in many industries, the companies embracing green will win. We want to be one of them. And as I said at the outset, us investing in green is part of an R&D investment. So at the moment, this R&D investment is actually rewarding us just through the lower cost, but we'll do it even if the cost was higher, no question about it. And then you talk about invest in employees, just on the investors. When we do roadshows, 2 years ago, European investors were asking about what is your ESG position? What do you do about decarbonization? Now the US investors are pushing for this, including the biggest one in the world, BlackRock. And they're starting to issue a list of companies not following ESG guidelines. And they're starting to be obviously negatively impacting how the stock will behave. So we do it regardless, is the net answer, John.
Yeah. Katie, there's a human dimension to this too, in terms of how, who you had to work with internally. Were there language barriers in terms of just translating from environmentalese, if you will, to financial speak or business speak? What did it take internally for you?
Well, no, there definitely was mutual learning. So when we first started to work with the finance team and we're bringing in our alphabet soup of TCFD and CDP and SASB, let alone scopes 1, 2, and 3, that was definitely a learning curve there. But also then as we went jointly on this roadshow, and we were able to hear firsthand as a sustainability team what 150 plus investors had on their minds and what they needed to see. That was a terrific learning for us. And Joel, if I could capture where both the finance team and the sustainability team totally wound up with a shared view after that mutual learning, it's one, greening of the capital markets is critical to tackling climate. Second, green finance can be an especially useful tool because of the forced rigor and transparency that investors certainly bring to bear, and because green finance can reach tougher sectors. But third, and this is really important, if we're going to really unlock those capital flows, the front end in structuring these instruments needs to get easier and not so transaction cost intensive. But the back end needs to get more coherent, less alphabet soup, standardized, and clear so that investors can have confidence as to this constitutes green. My investment is going to go to something that is understood to be green.
So the obstacle there, it sounds like, Olivier, and I'd be curious on your thoughts on this, is in part just getting everybody understanding, getting everyone on the same page and understanding why you're doing this, what the importance is, and then how to, in effect, link arms. Was that challenging at all, or what were some of the barriers?
It wasn't. You know, when this is interesting. You're asking. When we do something right for the planet, people are on board. And by the way, doing something right for the planet made a lot of business sense. So people were actually queuing up to participate to the project. We had no resistance internally to get it done. I mean, at the front line, KT team was there, our R&D team was there, our manufacturing team was there, and engaging in something that fundamental for the future, people were behind it, right? I heard stories all about dads and mom talking about what we're doing at the company at the dinner table and the impact that had in terms of motivation and being proud to be part of the organization. No resistance.
That's interesting. What was the conversation? I'm curious at the table.
So, do you know, my daughter or son? That's what we're doing today. We are really investing in great green technology to fundamentally reduce the carbon emission, the pollution of the planet, of buildings by something like 50%. 50%. How exciting it is, right? So the ice on the North Pole and the North Pole will be preserved, and the desert will not expand. I mean, that resonates a lot to people and to us as a management team as well. What we do is needs to have a value for us to come every day, and it does.
So it goes way beyond finance to employee engagement as well as one of the, I guess, intangibles. I'd like to ask each of you before I have to go, Do you see, from based on what you know now, do you see green bond is more suitable for a company or just as suitable for a company at the early stage of their sustainability journey? Or is it more suitable for leaders like Johnson Controls who have been doing this for a while and already kind of have their act together, now want to capitalize on that literally and figuratively? Katie, what do you see as the, is there a sweet spot here, or is this available to everybody?
Well, I think increasingly it is, Joel. Now, I'd like to see that whole trend accelerated. But one of the things that we felt strongly about at Johnson Controls is that once we built this very robust program, let's not hide it. And so it's right out there on our website. And if you visit our website, you can see both our green framework, green finance framework, as well as the thorough Sustainalytics third-party review. So between those two things, other companies can much more readily see how they can go to market and see what third parties consider is a high bar in terms of sustainability. So I hope people do use those tools and that we see a lot more action and activity. Olivier?
Yeah, the way I would summarize it is if your business has the ability to make the planet greener, do it. It's cheaper and will allow you to get into the root of gaining a competitive advantage because it's going to transform the way you run your operation. So it's open to everybody even more if it's part of your DNA as a company to make the planet greener. Absolutely.
One last question really quickly, Olivier. Is this what you're doing with green bonds and the engagement you've had between sustainability and finance? Are there benefits in terms of using the metrics and this whole process as a management tool beyond the bond itself in terms of its own sustainability journey?
Absolutely. So we need today to have products which will resonate with our customers. And the winner and the losers in our industry will depend on the ability of a company to decarbonize a building. So a key KPI is how many of our products are meeting the new standards of emission. Or then we are tracking when we deploy our capital at the customer site, are we really decarbonizing the building? So those indicators are as important as cash, employee engagement, and market share, because it's part of the R&D measurement of the success of what we do.
Yeah.
And Joel, I'd add too that we build all of that right into executive compensation metrics as well. So we're all aligned.
Well, there's an old saying that the pioneers get the arrows and the settlers get the land, but it sounds like in this case you did quite well as a pioneer. So thank you so much for showing the way, Eben. Thank you so much for sharing your story today to the GreenFin audience. Olivier Leonetti and Katie McGinty, thanks so much.
Thank you for having us, Joel. Thank you very much.
Thanks so much, Joel.